All right. So I'm looking at SoFi here this morning, and it's actually up 5%. I'm looking at this chart here. I had a cash secured put with a 24 strike price down about right here or so. And I closed that out just a little bit ago. The expiration was tomorrow. I had earned 90% of my premium, so I had to pay like $12 to close it. And I did that because I wanted to lock that in, but then I'm looking at selling another cash secured put for next Friday. And my objective in this account is to make maybe $500 to $1,000 a month selling cash secured puts against margin. So basically, it's not my money, it's Robinhood's money. And if I don't get assigned, I don't pay any interest on that margin. So it's like borrowing somebody's money for free. We have SoFi here in Robinhood. I trade SoFi options here, and we are selling a put. So remember, we're always selling something. We're never buying. I've heard people say you make money when you sell things, not necessarily when you buy things. So I don't buy options. People that know I'm trading options, they say, I know people who buy options, they lose money. Well, I don't buy options. I sell options. So let's get busier before I lose all my money. I'm looking at this week, so I want to go 1 week out. And so my strategy for this account is typically go like 1 week out and make a little bit each week. So I'm going to go with the 25. The delta is 0.21, means there's a 21% chance that I'll end up buying these shares. And I really don't care if I buy these shares. If I do, it's okay. So hit continue. And I'm going to go 5 contracts. So I'll make $118. And the bid and ask is 1 penny. When you sell something, you want to sell high, buy low. So I'm selling these. The spread here is only 1 cent. If it was like wider, I would go with the higher price, try to get more money. But since it's only a penny, I'm just going to leave it at 24 because I kind of want this to get filled right away. If I went 25, it might not get filled right away. If I put 0.25 in here, as I'm talking, I'll probably lose out. So low likelihood of getting filled, but you can't trust Robinhood. So 24, let's review. And so I'm selling 5 cash secured puts, 12,500 collateral. It'd be 500 shares at 25. That's the math. You can read all that, submit, and we'll see what happens. Hit done. So the thing I don't like about Robinhood, so it looks like it got filled right away. What I was going to say is what I don't like about Robinhood, it says it's not filled and it is filled, but I think it's not filled and is filled and all kinds of good stuff. So it looks like it filled right here. So I have another cash secured put for the double leverage Amazon for 116.26. I said I'd like to go maybe no more than a week out. This option here only has monthly contracts. So I had 2 choices, the 19th of December or the 16th of January. So it's already up $100. Placed that a couple days ago. And so I've earned 33% of that. The original premium was $300. Let's look at this for a minute. So this might be confusing for people who are new to options. So I sold this contract for 25 cents a share. So it's $125 for the 500 shares. But also the contract, the strike price was $25. It's just a coincidence that it's 25 and 25. Let's go up here to my option tracking spreadsheet. And this is actually in this account. So I like to keep track of what I'm doing somewhat. So today's the 18th, and that contract was for next week. Not sure what the expense is. I'm going to put just 40 cents in here just for now. Okay, so columns here, type, I sold. This is the date I open it, which is today. This is the expiration date of the contract. When I actually do close the contract, I'll be putting that in here. And it's SoFi, that's the ticker. It's a cash secured put. Strike price is 25. If it goes down to 25 or lower, and if it's there on the 26th, I agree to buy 500 shares of SoFi for $25. And if you look at the chart, and if you look at what it's doing here, past couple months, if people would say, let's say when it was up here, if somebody said, man, I wish I would have bought SoFi at 25, and then it goes down here like to 25 or 24 something, and then it goes up to 29, people say, man, I wish I could have bought SoFi for 25, but now it comes down here almost to 25. So what I'm saying is, man, if I can buy SoFi at 25, I'd be happy because chances are it'll go back up eventually. So what I'm doing, I'm saying I'll buy SoFi at 25. So not only am I saying I'll buy SoFi at $25 a share, I'm getting paid $125 or 25 cents a share, which is actually what, a 1% return for 1 week. If I did this every week, that'd be a 50% return for a year. So I think that's pretty good. If I end up buying it next week for $25 a share, I wait perhaps a week. I'll sell cover calls on it as it's going back up. And eventually I might sell it for 28 or 29 or maybe even all the way up here at 32. So I make money if it goes down, I make money if it goes up. So that's what selling options does for you. So let's talk about these two I closed real quick. And I do got to update this one here. I just closed that, but this one up here, the strike price was 26 and it's hovering around 26. Now I went ahead and I closed that early because I don't know what the price of SoFi is going to be tomorrow. If the price of SoFi tomorrow is under 26, I would have bought 400 shares of SoFi tomorrow for $26 a share, which would have been okay. But what I decided to do is go ahead and just close that early. And when I did, I made $42. But I decided to go ahead and buy that back early. And when I did, I had to pay to buy that back. So when you do the math, I made 11 cents a share for 400 shares. And so I ended up with $42. Okay, so I jumped in here. It was 4 cents a share to buy that back. Let's go ahead and update that. And I closed that today. So I actually had that one for 13 days. I returned 0.82% over that 2 weeks. So annualized, that was almost 23%. And the other one I sold for 42, which I thought I did a lot worse on, since I only had that for a week. That was still a 21% return. You can see the one before that for 10 days was 34% return. All right, let's look at one more thing before we go here. Okay, this is my experiment of selling a rental house and investing in some high income ETFs and use a margin to boost my return. And you can see year to date, I'm sitting at about 36%. Start with 70,000, the account's at 95,000 approximately. I've used about $70,000 in margin. And for the past year, I've been just using the distributions from the ETFs right here. So these are the monthly distributions and total amount. And this money here goes toward paying down the margin. And as the margin gets paid down, I'll buy some more shares of these ETFs. And when I buy those, that's coming out of the margin. This is the balance of my equity, and this is the margin. This here is 84% of this number over here, for example. So my goal was to keep this at 75%, this margin. However, I have all this margin sitting there that I don't use, but I don't want to use it and pay interest on it. So what I decided was to start paying that down. So I could pay it down a couple different ways. One, I just let all these distributions each month just come in, and when they do, they go straight toward the margin and pay that down. However, every time there's a dip in the market, I might want to buy maybe 50 more shares of something. So after doing this for a year, I decided for next year, what I'm going to do, I'm going to sell cash secured puts and use that margin. And when you sell cash secured puts against margin, you don't get charged any interest. So this is the interest I'm paying to buy more shares of the ETFs, but by selling cash secured puts, I'm earning income. And for the month of December right now, this is just a running tally. I've earned about this much premium income selling the cash secured puts. So this money goes directly toward the margin balance here to pay that down faster. And then I can turn around and perhaps use distributions from the ETFs to buy more shares of stock when it gets paid down. So you can see here now I'm at 74% margin, and that's the lowest I've been since, I guess from week one, back here in November 2024, I was at 71% margin, and that's the lowest I've ever been. At one time I was at 107%. So you can see already I've been doing this for a few weeks now, just about 5-6 weeks, and I've paid the margin down already from, well, it was like 87%, but even since here, I've paid it down 5% in the past month. It's down to 70,000, which is also as low as it's been since back in, I guess in July, it was under 70,000. But the other thing is my equity's up too to 95,000, where back in June, it was like at 70,000. So my equity's grown almost 24,000. So that's what I'm doing. Selling cash secured puts on this account, pay this margin down. And my new goal going forward for next year, I'll have a new spreadsheet. Don't want to get into that too much, but this is the spreadsheet for 2026. This is how I expect things to go for next year. This is projected, and I expect the margin to be about 70,000 as of the first of the year, which is a couple weeks. And you can see that's already about 70,000. So that goal I'll be meeting. I don't know if my equity will be 100,000 or not. We're shooting for that. It's not much I can do about that except sit and wait. But my goal is to get that margin to pay down. And right about here is where my goal is to get that down about 55,000. And the goal is to keep the margin at 50% at that point. So you can see the margin percent will go down each month here. And when it gets to 50%, I'll keep that at 50% instead of 75%. So for next year, that's my goal. And then this is what my goal for my equity to grow. And the margin will still grow with the equity, but it'll always stay at 50%. And I'll speed that process up of buying more shares by selling cash secured puts. And as the margin gets paid down 50%, I can actually do more cash secured puts because I have more margin available. And going back to this sheet, what you'll see this number go down about $200 a month or less. But this number down here, you should see go to maybe $1,500 a month because I'll be able to do more cash secured puts. That's my plan for 2026. We'll see how that works. And do I think it will? Yeah, I do think it will. My plan for 2025 worked out somewhat pretty good. If you look, I was expecting to be at 111,000 at the end of the year. I'll end up probably between 95 and 100,000, and I'm up 36%, but I expected to be up 56%. Now, did I hit that goal? No. Is 36% good? Yeah. Am I changing these numbers of growing about 50% per year? Is that unrealistic? No, I don't think so. Some people will say it is, but that's my goal. And I think I can do it next year by selling cash secured puts. All right, I've been going way too long. Just wanted to share what I'm doing.